From Forex Traders Daily, this is your daily analysis with Ross Mullins, live from Richmond, Virginia.
Hello everyone, this is today's video analysis for May 7th, 2018. Today we're going to take a look at the GBPUSD, Great British Pound versus the US dollar. For today's trade analysis, we're starting here on the daily time frame. I want to look back in time for a little bit. You look all the way back here into December and January when we had the changeover 2017-2018. We see a little period of congestion, hesitation right here inside the black circle on the left between the yellow and the orange zone. That's 1, 2, 3, 4, 5, 6, 7, 8 days where the market bounced around between the yellow and the orange shaded area. So we know with some historical fact that the orange zone has been resistance and the yellow zone has been support. And so we just float that all the way to the right hand side and we have this similar expectation between the orange and the yellow shaded area. The orange zone becomes our resistance and our yellow zone becomes a potential support. And of course, if it breaks through there, we'd look for it to go lower to the next support level. Now the trend is down. That's not too hard to see. The momentum, the trend has been going bearish for quite some time now. Zoom it out a little bit and you can see the break of the blue trend line. I know it's hard to see the candlesticks right now, but you see the blue trend line coming up from the bottom, the 100 period moving average paralleling that blue trend line. We zoom it in one time. Here it is again coming up from the bottom. What's important about that trend line and the moving average is that we're underneath there. So we have this bearish expectation along the short black trend line, under the blue trend line. We're underneath resistance, which is of course the orange shaded area, and this expectation that it could continue just to float in that direction. Underneath that yellow shaded area, let me see if I can pull that over. We have this little blue shaded area here, 1.3400, 3380, and then beyond that 133.40, 1.3305, the pink shaded area. So plenty of room to go. What's interesting underneath the bottom of the yellow shaded area as well, 1.34, 35 or so, 36, is the 382 Fibonacci retracement level of that blue trend that I just showed you. All the way from the bottom to the top is the 382 right at 1.3436. If I zoom way out again, you can see I've taken that fib all the way actually before the blue trend line. The lowest low you see here on the chart way back here in 2016 to the most recent high. And that 382 sitting right into that yellow shaded area that we've been discussing as our support. So what do we do with this? We're seeing the market go down. We're seeing a downtrend. How do we trade it? Well, I often say that if it's best to sell into resistance or a break of support. So we've seen both of those. If I zoom it in a couple of times here, we've seen the break of what was support, the orange shaded area, which is now becoming resistance. So if you're looking to go short, you're looking to do it as close as possible to that orange shaded area. Why do you do that? Because it provides the minimal risk. Your risk, your stop loss, is going to go above the orange zone. Now I'm just putting a line here to represent where that stop loss is. We'd need to calculate that to fit with our risk parameters. But above the orange zone would be your stop loss. So if you put a stop loss here, you know that that's your potential risk. That if the market gets above the orange zone, it's going to turn around, and the black trend line, turn around and potentially go back higher again. So stop loss is above. So how do you make your stop loss smaller? Do you just bring it closer? Or do you allow the market to float back to the orange zone as resistance? And I think that's a better way to do it. Selling into resistance, sell a rally back to the orange shaded area, targeting the yellow zone first as our first target, and of course lower levels, blue and pink zone, as it continues to pressure lower. The only real reason that we would consider a long or a buy here is that it breaks above. It changes the pattern of the trend, which is of course clearly bearish. 4-hour time frame, it's not really going to change any of that. We could see the market already one time testing underneath that orange shaded area. Any further challenges, further tests of that orange zone become an opportunity for us to target back down to the yellow zone. I don't know if it'll make it back there again today or not, but if it does, we have a plan in place. Looking for a short under the orange zone, risk stop loss goes above it. We target the yellow zone or lower levels for the pound dollar this week.
From Forex Traders Daily, this has been your daily analysis with Ross Mullins. If you would like to get Ross's analysis on all the currency pairs he's watching and all the trades he takes today, join him in his live trade room by clicking on the link below. Please leave any comments you have about today's video in the comments section below.